Welcome to the Exit Plan Show. Today's guest is Tim Scott. He's the founder of Wallace Scott Law Firm in Denver, Colorado. Stick around to the end of this interview and we're going to show you how you can subscribe to our newsletter, download some free guides, and maybe win a free book. Thanks for joining us. Thank you to Zarlingo Robb, CPAs and Business Advisors in Wheat Ridge, Colorado, for providing a location for us to film this episode. At Zarlingo Robb, they think like business owners. For more information about Zarlingo Robb, please click the link in our website show notes. Hi, I'm Norman A. Hood, financial advisor and host of the Exit Plan Show. I interview America's top advisors like today's guest, Tim Scott, to help business owners like you enjoy more personal freedom, grow your company faster, and retire someday on your own terms. Tim Scott is with the Wallace Scott Law Firm in Denver, Colorado. His practice areas are estate planning and administration, business and individual taxation planning, exit and succession planning, tax controversy representation, entity formation, and business growth and incentive planning. Glad to have you back again, Tim.
Thank you.
Today we're going to talk about entity formation, and we'll just start with something really basic. What's the difference between a C corporation and an S corporation?
Both entities, you file articles of incorporation with the Secretary of State of whatever state you're looking to have your business in. The difference, though, is how they're taxed. The C corporation is taxed at the entity level. It has one layer of tax and then another if there are proceeds left to distribute up to the shareholders. So there are two. We look at this as, we call this double taxation. Our shorthand is tax lawyers. An S corporation is different. It is called a pass-through entity. It doesn't have tax at the S corporation level. It still is a corporation for all state law purposes, but the individual attributes such as income and deduction, they pass through up to the individual shareholders and are not taxed separately at the S corporation level.
Okay. And I know there's lots of advantages and disadvantages of each one. Could you describe the business owner scenario where they would want to maybe gravitate towards a C corporation versus a scenario where they might want to be more interested in an S corp?
So we see a rare number of C corporations, but there are certain cases, to answer your question specifically, where we see that they are favored. One is if that business is convinced, and we've seen them convinced, where they are going to go public. So they will. There really is no other entity that's out there that at least is commonly recognized for publicly traded entities. So they would form a C corporation, probably in the state of Delaware, and in anticipation of that actually happening. We've seen alternatively, we've seen professional service organizations or professional associations, lawyers and accountants and whatnot, also set up C corporations where they're heavy on bonuses. So when you at the C corporation level, even though there's double taxation, as long as there are bonuses paid out of the C corporation, it's a deduction to the entity. You just zero out your income every year. Sometimes it's an easier entity to deal with. More prevalent, though, is the S corporation. So more professional associations, more small businesses that we see are S corporations versus C corporations because they're concerned about that entity level tax. And when you start up a business, for example, hoping to exit someday, if you incur a bunch of losses up front, then you're able to hopefully take those on your individual return rather than have to have them suspended or held in a C corporation.
Okay. So you ever run into situations where business owners go into this blindly? Maybe they start out in a C corporation and they find out they're in the wrong spot.
I sure do.
So how do you do?
So we always look at, in that situation, and it definitely does happen, where we look at to see if there are creative ways that we can move the business from C Corp to S Corp or LLC or what have you, just another entity that's more tax efficient for the taxpayer. There are a host of rules, though, in the Internal Revenue Code that try to penalize a taxpayer for doing that, especially if the C corporation's been profitable. So I would say if a taxpayer or if a client taxpayer is looking at that as part of an exit plan or otherwise, even just operationally, don't give up hope and say, well, I wish I would have done it now. I don't have any other alternatives. There are definitely alternatives, but you got to go through them pretty carefully.
Okay, in addition to C Corps and S corporations, what are some other entities that, besides just being a sole proprietor, what other entities should a business owner look at?
So it's one of the most common entities, I would say, probably tied neck and neck with the work that we do with S corporations, is the limited liability company.
Okay.
So LLCs are popular. They're available in all states. They're sort of late to the game. They weren't around like the corporation. They haven't been around nearly as long. But they offer the same. They offer pass-through taxation, the benefit of that, as well as sort of a corporate level of asset protection, and they're very flexible to do certain types of things with allocations of income and deduction. And then another entity that is popular is the partnership. There are certain things there that you have to look at from an asset protection standpoint, because the general partner in any partnership is liable to the extent of that general partner's interest. So sometimes when people are evaluating the choice between S corporation, LLC, and partnership, they'll look at all three to see what makes the most sense from a tax standpoint and asset protection standpoint.
Okay, great advice. Okay, so that wraps it up. For more information about Tim and Wallace Scott Law, please go to our website, and while you're there, you can subscribe to our newsletter. You can download some free guides, and you'll have opportunities to win lots of free books about exit planning. Thanks for joining us.